Hi, this is Jenny from the Small Business Guru. If you've been looking at your 2020 net profit and worked out that you have more profit than what you've expected, I'm just going to run through a few things you can do to reduce your tax bill. It's important to remember that the information provided by the Small Business Guru is general in nature and does not constitute financial advice. Information is accurate as at the time of publication, however, information can change without notice and no guarantee can be given as to the accuracy of this information at any future time. To maximise your deductions, you need to be really disciplined in keeping your substantiation documents. It's important to remember that business records need to be kept for a minimum of 5 years from the date you file your tax return and up to 7 years if you have a company or a trust. There's a number of ways you can do this apart from the paper filing system, including using a free app from the ATO. There's also some data capture and data recognition tools like Receipt Bank and HubDoc that will integrate with your accounting system. So how much tax are you going to pay? The company tax rate for base rate entities, which are just normal trading companies with turnovers under $50 million for this financial year, is 27.5%. If you are not a base rate entity, your tax rate is 30%. If you're a sole trader or a partnership, then you pay tax at your marginal tax rate, and I'll put a link in the comments so that you can work out what that might be. So this year, there's a $150,000 instant asset write-off that the government's given us because of the coronavirus. And it's available for assets that are purchased between the 12th of March and the 31st of December 2020. Although you need to spend that money before the 30th of June if you wanted to claim it in this financial year. The asset must be installed and ready for use at that time, and your business must have a turnover of less than $500 million. So most businesses, when they think of assets, they think of motor vehicles. So it's important to note that there are a few special rules around cars. So the maximum allowable cost of a vehicle that mainly carries passengers is $57,581 multiplied by your business use percentage. So if you don't use your car personally at all, then the maximum you can claim, regardless of how much the car costs, is $57,581. If you do have private use in your car, then you need to calculate your business use percentage, which is done through the use of a logbook that you need to keep for 12 continuous weeks. If you don't want to keep a paper logbook, there's a few apps you can use. I use and recommend Driver's Note, which has a free and a paid version that you can use. So I think the free version has about 12 trips a month that you can use, otherwise you'll need to use the paid version. But it's really easy to record, and especially it is easy to differentiate between your personal and your business use. Superannuation is another great deduction that business owners can use, so that you're able to contribute up to $25,000 a year under your concessional cap. So the funds must be received by the super fund to make it deductible in this financial year, so that's before the 30th of June, in order to be deductible. It's important to note that if you accrue super but you don't pay it, it's not deductible and it gets added back onto your net profit at the end of the year. If you have a home-based business, there's a few deductions that you can use, including electricity, your rates notice, insurance premiums. Also rent if you have a commercial contract between the property owner and the entity that is running the business. So your deductions are based on the floor area and the amount of time that it is used for business. So you can also use interest deductions if you have certain types of businesses where the rooms used for business are converted to a business use and they're not easily converted back to a personal use. So things like hair salons, caterers' kitchens, or photography studios. If you have those types of businesses, then you are able to claim a portion of the interest on your mortgage as well. Travel is another good expense for small business. You need to make sure that you have receipts for airfares, accommodation, any taxi fares or conference fees, meals, all of those sorts of things are deductible. If you are staying longer than what is strictly necessary for business, then you need to keep a travel diary and you need to be able to apportion those big costs like airfares and accommodation into the business portion and then the private portion if you have stayed longer, started before or finished after the business portion of your trip. So if you're still finding that you've got a lot of profit, then you might want to think about prepaying some expenses, especially if you think that your income is likely to be reduced in the next year compared to this year. So if your income this year is higher than what it would normally be, you can prepay things like insurance. So that can be any type of insurance like professional indemnity or public liability, even normal business insurance, motor vehicle insurance. If you pay those 12 months in advance, then you can claim the deduction in this financial year. You can also prepay interest on your loans, whether that's like a car loan or any sort of business loan that you might have. You can also prepay rent, depending on the sort of rental arrangement that you have, and then you can claim that deduction in this financial year. The other thing you can do is if you think your income will be reduced next year and you haven't got an issue with cash flow, you might want to delay some invoicing until next financial year so that you can put some income or revenue into the 2021 financial year. Thanks for watching. I hope you found the video useful. If so, can you please click like and subscribe to my channel, The Small Business Guru. Thanks. See you soon.